Both of our next guests playing a bit of defense. So let's bring in Charles Schwab, Chief Fixed Income Strategist Kathy Jones. Also, Bryant VanCronkhite, Senior Equity Portfolio Manager over at Allspring Global Investments. Thank you both for being here. Kathy, we're going to start with you. I mean, the budget deficit was something that Eamon just mentioned because Elon Musk mentioned it in a very high-profile way with regard to what our current fiscal state is. Do you think it's going to bother the bond markets over the medium to longer term? The short-term noise aside, are deficits an issue for this country?
You know, historically, they haven't been. You know, we're the wealthiest country in the world. We certainly have the capability of servicing our debt. But I do think that what the market's telling you now, with long rates moving up in concert with those elsewhere, Japan, et cetera, is that the market's getting more sensitive to rising debt and deficits and demanding more risk premium as they see no change in that trajectory. So it isn't so much that there's a risk of default. It's more that, you know, pay me more to compensate me for the risk that you're going to keep spending money rather frivolously. Now,
is the inflation story, Kathy, still an issue? We know that it's something the Fed is watching closely. We know that there are probably those folks within the governing body that believe that inflation may still be a problem. Is it something that we have to worry about as much as the deficits issue, or are those two kind of like a two-pronged negative attack on that bond market overall?
I guess it's the two-prong negative attack. The problem with inflation right now is the current readings have been improved, but we know there's a bump in prices coming from the tariffs. When and if we get the tariffs, we don't even know what magnitude those will be or the timing, but we know the tariffs raise prices, and we've seen some preemptive price increases to get ahead of those. So we know that's coming. Does it turn into a sustainable trend in inflation? I think that's the big question that the Fed is struggling with. On the flip side, tariffs do slow growth. And so they have to decide what's the bigger risk right now. Is it the inflation risk or the slowing growth? Right now, growth looks okay. Unemployment rate is still pretty low. So they're going to focus on getting that inflation rate back and not doing anything until they know how much the tariffs are going to cost in terms of inflation.
Bryant, with that macro backdrop that Kathy has just laid out, it's kind of maybe amazing to some folks out there that we're at an S&P 500 level that's just a stone's throw away from record highs yet again. Is this a market that you think is justified in terms of valuation for the current stock market?
Yeah, the market's been really resilient through all the uncertainty and all the noise, but for good reason, actually. The soft data that was very weak coming into the year has actually inflected positive, and the hard data we all feared that would roll over hasn't rolled over. And so the growth expectations are low but reasonable. And as you mentioned, inflation data is coming the right direction, which is giving the Fed and the market maybe a chance to act more positively or more aggressively, more offensively in the near future. So I think the market's grabbing onto the data right now, recognizing the risk around the one big beautiful bill not getting done and recognizing the best and final offers on tariffs might not be what we want them to be. That's still out there. But today, things look okay, and I think the market's grabbing onto that for the time being.
You've got some different kind of options, like a choose your own adventure. Brian, you've got, if you want to play offense, D.R. Horton, if you want to lean into risk in this environment, I guess. Defense for offense, you can explain what that means, is Charles River Labs. And then pure defense, what is ticker PRMB?
Yeah, so what we're looking at right now is a situation where you have this wide expectation of potential results. And so you have to build a balanced portfolio. You want to have some offense in your portfolio. And so from an offensive standpoint, look at the home builders like D.R. Horton. They've really struggled because starts have been weak, turnover's been weak, and those valuations reflect a very weak environment. But if we are in Goldilocks, or if the Fed's able to behave offensively, bad news could be good news, and rates coming lower will be very good for D.R. Horton and the builders and the building product stocks. I like that for offense. Now, offense for defense is, or defense for offense, in other words, Charles River Labs in the healthcare space. Healthcare is traditionally defensive, but they've been struggling behind a lot of the regulatory uncertainty, the most favored nation pricing, and the biotech especially has been challenged. Charles River Labs is the picks and shovels to biotech, and we're starting to see some life being pushed into those stocks right now. And I think Charles River Labs is one of the best vertically integrated self-help businesses out there with an activist in place now as well. Could be a great place to have a little defense from healthcare, but while getting some offense on the other side of it.